right. Good afternoon. Happy Friday. Welcome to the Financial Shepherd Happy Hour.
Cheers.
Cheers, Ezra.
Lovely sunny day.
Beautiful on the back deck.
I can do about 20 minutes of that.
I'm Joshua Casey Garland, certified financial planner, owner of Shepherd Wealth Management. It's my good friend and video editing genius, Ezra Kellerman.
Thank you.
Ezra, big plans this weekend. My youngest is going to be 4 years old.
Yeah, that's
So-
my big plans this weekend. I'm looking forward to it. We got a Disney princess themed party here at the house.
And thank goodness we have something to celebrate and be very happy and excited about, because it's been a very
Always.
rough year.
Yes.
No doubt as relates to the stock market and the bond market. Really anything other than energy has been a rough year. And this week has been no different. So the reason why we do these shows, these little short 10, 15-minute happy hours, one, just kind of a relaxed format, talk about what happened this week, why it happened, what we can look forward to next week, and what we might be able to do about certain things that have happened in the market. And of course, we also do every couple of weeks our bigger broadcast of a 45-minute plus
Right.
podcast. We get into specific topics and answer viewer questions. So that's why we do this. And this week was a rough week for the market, coming off of the heels of a hotter inflation number. Jackson Hole, where Fed Jerome Powell, the chairman of the Fed, was very hawkish, talking about the market's going to have to experience some pain before things get better and before we can get closer to that 2% inflation number that they're striving to get down to from where we're at right now at about 8.3%. And then today or yesterday was really a pretty big bombshell that was dropped from the FedEx CEO. And in hindsight, just back in June, when FedEx had its most recent quarterly announcement prior to yesterday, they were very bullish. They raised their guidance. Stock looked good. And then yesterday, the CEO basically came out and said, hey, we significantly underperformed. Demand is slowing. And, they had a very rough day in the market today. It was down. FedEx stock was down more than 20% just in one day on the back of that news. So that's a big reason for the shock in the market. People are basically taking that information from that CEO, again, on top of some of the other things that recently happened, hotter than we expected inflation number. Again, the Fed coming out after the Jackson Hole meeting being very bearish. So all that kind of adding up to investors trying to predict what's going to happen coming up next week and into the last quarter of the year, beginning in October, saying, hey, maybe we really will have the worst case scenario possibly happening. And the Fed Chair Jerome Powell on the 21st of next week is going to come out with his announcement for what they're going to do with interest rates. So interest rates, everybody knows they're going up.
Going up next Wednesday.
No doubt. That was the expectation is, yes, they're going to go up, but the question is how much. The market's pricing in about an 80% chance of a 75 basis point hike, which would be 3 of them in a row.
Wow. We were hopeful it wasn't going to be that high a couple of weeks back.
We were. I think the market was positioned for that, hence the sell-off. I mean, we saw the S&P 500 down more than 5% this week. The NASDAQ's down more than 5% this week. And the Dow Jones down over 4% this week as well, leading into this news. So basically, the market's forward-looking, saying, hey, what is the actual terminal rate? Meaning, where does the rate that the Fed says, now we don't need to increase rates anymore. Now we're going to pause and potentially look forward to dropping interest rates in the future, probably sometime in 2023, I would hope.
Yeah.
So that's kind of what the market's trying to price in right now. It's obviously it's about difficult to predict what interest rates are going to be, kind of like predicting what the weather is going to be on any one particular day. So
especially here in the Ohio Valley, you wake up thinking something, go to bed with a different reality.
No doubt. I've been wearing sweaters and sweatpants at night, even though it's whatever, 80 some degrees right now. So that's what the market's supposed to do. It's supposed to be forward looking. The market's pricing things, what they think will happen in the future today. And that's the reason why you see all this volatility, because investors are having a very difficult time, as they should have a very difficult time of trying to predict what the future will hold, specifically as it relates to rates and how that affects corporate earnings. So my expectation coming into next week is that we'll probably see about 3 or 4 weeks of a lot of the volatility that we saw this week. And there's a lot of reasons for that, but the biggest reason for that is I don't believe that the market's pricing in the fact that there's a whole lot of information in that CPI report that's showing that what the Fed is doing as far as increasing rates and slowing demand is working in some parts of the economy here. And there is, in fact, outright deflation for a significant portion of the calculation for CPI. The problem is that all these interest rate hikes that the Fed's done this year is going to take about 6 to 12 months before a lot of that starts to show up in the data. So a lot of people are very concerned that the Fed's going to continue to increase rates at this same pace for the remainder of the year. I don't think that anybody would be too surprised next week if they do 75 basis points. I think, again, the market's kind of priced that in. And if you look at the 2-year Treasury note, as 2-year Treasury is almost at 3.9%, right? And the 10-year is not even at 3.5%. So you have this inverted yield curve. We'll talk more about that as we get closer to the end of the year and looking forward into next year, because typically inverted yield curves would be a leading indicator about 6 to 12 months out of an actual recession. Now,
Right.
Recession is just a word. It doesn't mean it's the end of the world. It's a normal market cycle type of event. They don't have to be long and drawn out, but this bear market has in fact been very long and drawn out, even though it hasn't actually hit its historical average yet, or about as how long the bear market will last. I've been calling for it all year.
You have, yeah.
Based on just history. Now, past performance, for all you compliance people out there, and me as a fiduciary, have to tell you that past performance is no guarantee of future results. Although I've quoted Warren Buffett a million times and will continue to do so, is that Buffett famously said the one thing we know about human beings is they don't learn from history.
No.
So I have to take historical context into the equation here, and history would say bear markets last around 280 some odd days. I've been calling for signs of recovery sometime in October. We'll see what 2023 looks like, but my expectation is sometime around mid-October, we should start to see a bounce in equity markets. The University of Michigan survey came out today as well.
Ooh.
It was also a little bit better than what people were expecting from a sentiment standpoint, although it's starting to get back towards, some of those historically bearish numbers. A lot of negative sentiment in the marketplace. I would be anticipating, if I'm a investor for the long term and trying to figure out, where should I rebalance? When should I pull that trigger? What I would look for is the S&P is probably, based on the indicators that I have here on a technical analysis perspective, you might see somewhere around 3,700, maybe 3,650, coming down from where we're at today, around 3,850. You'll probably see that happen over the next 3 or 4 weeks. If that were to happen, that's where you can start to begin to rotate into the things that have underperformed the most. And the biggest sector that have underperformed the most this year has been technology. Long shot. It is the biggest sector of the market. It's the most important as far as it's integrated with all sectors of the market. I don't care if you're a utility or you're a Walmart or you're a trucking company. Every institution, every industry is highly investing in technology to run their operations.
Yeah, I mean, think of anything you want about the human. Business, tech is part of going forward. Technology is what's going to see us through the future.
Correct. So we have to have an allocation to that. What we've done here at Shepherd Wealth Management for clients is be very overweight healthcare. I would still keep that positioning probably throughout the remainder of this year because it gets the best of both worlds, both offense and defense. Defense meaning that regardless of whatever happens in the economy, let's say the stock market doesn't do what I'm thinking it might do, and it just continues to go down and go down for the remainder of this year. Well, if you happen to break your arm or something happens medically, there's still a good chance you're going to go see the doctor, not try to fix yourself.
Yeah, well, don't put that evil on me.
Right.
Right now.
YouTube's great, but there's probably how-tos on how to stitch, yourself.
Self-suture.
I would bet that most people are still going to go see their physician. So you get to play, that's the defense. Even if the market goes down, people are going to still go to the doctor. And offense is when things are good, then people are still going to go to the doctor, and you probably see even better benefits from that. And last but not least, healthcare, or not healthcare, but the energy space, still the only positive sector in the marketplace this year. It has been super volatile as of recently because people are expecting this global recession, which means they expect lower demand. We're really just not seeing that at all in the data as far as demand is concerned. I mean, some things are slowing down on the demand side, but it's really the supply equation for oil, energy, natural gas. There's a huge dislocation between the demand and supply. And if supply is lower than demand, we expect prices to ultimately bounce. We've been pretty overweight energy all year. I expect that when the market starts to recovery, Energy will be a part of that. We want to rotate out of energy into, again, the space that's been the biggest laggard so far this year, which is technology. So that's what we're looking forward to as we move forward for the remainder of September, which is probably going to be a little bit more pain to the downside.
Yeah, we probably haven't seen the precise bottom yet. Hold on.
I don't know if we're going to retest the June lows, as we might get fairly close to it around that 3,600 level, but I'm kind of expecting maybe we don't completely touch that June low bottom, but nothing would surprise me over the next 3 or 4 weeks. But after that, anticipate a recovery, and that's what we're looking forward to. We'll worry about 2023 next year, but we're certainly excited about 2023 because it might be for the first time in a long time that bonds look attractive. And
that never happened. That will never happen.
You might actually be able to get a positive real return out of fixed income fairly soon. Again, inflation has to come down, right? Again, the 2 years almost 4%. That sounds cool, but if inflation's 8.5%, then your still real return is negative.
Yeah.
And on top of that, the international market's almost for sure going to have a pretty severe recession, specifically this winter, which again, why you need to have a fair percentage of your portfolio allocated to energy.
Right.
Of course, do your own research. You don't want to have all your eggs in one basket. We use an ETF for that, actually.
Yeah. Or contact a fiduciary like Joshua.
Give me a call. I'll be happy to have that conversation.
Doing the research on your own. That's very important to speak to someone who's an expert.
Exactly. And international markets likely going to have a significant recessions. We don't have any clients in international positions or ETFs, although a lot of the companies that we do invest in are global. They're doing business everywhere, and the dollar certainly hurt their earnings, which I could go on and on about how the dollar affects corporate profits. But the short and sweet of it is you're likely going to see the rest of the world, ex-United States, as bad as it has been in this year from a stock market perspective, they're going through a heck of a lot worse in pretty much every other part of this planet. Therefore, you can probably expect to pick up, a really good price on something like a global X US ETF. So basically is covering all countries outside of the United States from an exposure standpoint, very low cost way, very diversified way to go about doing that. If you don't want to do research on individual, companies that are traded on a different exchange, over in Europe or Asia, that's what we're going to do probably sometime in 2023. So a lot more to come, a lot more to talk about. Although it's been a very difficult week, very difficult year. These things do not last forever. It shall pass, as they say. And that's a big part of the reason why we really do enjoy, doing this every Friday.
Oh, yeah.
So you can catch the show. This is the Financial Shepherd Happy Hour every Friday around 4:15 when the market closes. The only reason why we wouldn't do it on a Friday at 4:15 is if I happen to be somewhere completely different than where Ezra might be. But outside of that, you can catch us almost every Friday. You can certainly text in questions or give me a call directly, and we'll make sure we address questions at 513-630-2664. And next week, I believe Tuesday, Ezra, we're going to do the full-blown 45-minute podcast. You can text questions as we prepare for that. And that'll, of course, go up on YouTube. The Audible version will go on Spotify, and you can go to shepherdwm.com, our website. There's links right on the top of the website that takes you right to our YouTube page or right to Spotify. So you can watch and listen at your leisure.
Yeah.
Hope you all have a great rest of your weekend. If you're in the Independence, Kentucky area on Saturday around 4 o'clock, swing on by. We'll be having a good time here to celebrate my daughter's 4-year birthday. Ezra, it's a pleasure again.
It's a pleasure. Remind the people, too, about our flood relief fundraiser.
Lastly,
want to make sure we get as many people over there as we can.
I wrote it down here, and it's been something we've been talking about, and I almost forgot to mention it, so I appreciate it. Hazard, Kentucky, a devastating flood happened there earlier this year. I got to spend a full day there with a good friend of mine, and we just saw the devastation, the impact that flood made on that community. People lived there their whole lives. I mean, probably some, maybe even more than half a century. They never saw anything like this before. They're just absolutely devastated. Most don't have flood insurance because, again, it's just not something that they ever imagined would ever happen there.
Yeah.
So they're definitely going to have a long road to recovery. Their mindset and their positivity in this devastation is inspiring. We want to do everything that we can to help them out. It's a big part of our mission statement here at Shepherd Wealth Management. So we've partnered with the Foundation of Appalachian Kentucky. They have a crisis fund. You can go to our YouTube channel. We have a whole bunch of stuff there. Our social media, whether it's Facebook, Instagram, you can find links to that. And if you make a donation, we certainly appreciate any size of a donation.
Everything helps.
We're trying to raise $20,000, and we've committed at Shepherd Wealth Management to make a matching donation of 10% of the total proceeds raised. So we hope to be able to donate at least $2,000. If we can raise more than that, great.
Yeah,
we'll certainly do more, and we'll make kind of a next couple of weeks. We'll have a kind of a closure to all this. But you can certainly, in the additional notes, if you're going to make a donation, either put SWM or Shepherd Wealth Management. That's how we're keeping track of those that see the program or listen to it on Audible or see it on social media. The amount that we're able to help them raise through the announcements that we're making here, so that we can make that 10% matching donation. So don't forget to check that out. We certainly will have a lot more to share on social media, so you can certainly check out the Shepherd Wealth Management page and find out all that information.
And for those of you that are going to be watching this recorded, onto the YouTube page after we finish live, we put it on our archive. The link's going to be posted below in the comments, so you can hop on there and give as much as you want. Like Joshua said, pretty much every day on all of our various social media sites, we cover all of them: TikTok, Twitter, Instagram, LinkedIn, Facebook, all of them. YouTube, we do another additional posting sometime in the evening, just specific for the flood relief. So you can certainly find the links there also.
Yeah. And if you have questions, just can't find the link, just reach out 513-630-2664. We'll get you everything that you need. We're not taking any money.
None.
It's all going directly to the organization. They have boots on the ground, and it's going to go directly to those that are in the most need.
That's a civic organization, just for just the neighborhoods and the communities affected, not affiliated with any other type of organization or any type of political party. So they know exactly what needs to happen. Like Joshua said, they're there, boots on the ground. They see where the money's got to go every day, and they take care of all the dispersals.
So very much would appreciate all of your help. If you see this, please share it with friends, family, not just for Shepherd Wealth Management benefit, but for those that could really, really, truly use your help and support down there in Hazard, Kentucky. So it's been a pleasure. Again, I hope you all have a great rest of your Friday. Have a great weekend. I'll see you guys next week, and go Bengals.
Go Bengals.